Good morning. Welcome to Goodwill Commodities. In this presentation, we are going to see how you should have applied our simple day trading strategy to gain success in yesterday's market. You can see this blue color candlestick that indicates yesterday's market price opening. As you know that whenever I place this pointer, the cursor on any particular candlestick, you can see the date and time below. And this long blue color candlestick that indicates yesterday's market price opening. In order to follow this simple day trading positional strategy, you need to follow certain rules. And our first rule says that whenever the price is above this green color moving average line, you should always stay in buying. And we had made it very clear whenever the price opened bit higher compared to the previous day's price closing, where you should take an entry point. You should wait for the market to that is the candlestick to touch the first white color band. That should be your entry point. So now I am moving this so that you can see that this is the area where the price touched the white color first band. So whenever the price touches this white color band, it should show a blue color indication if the price was staying above this green color line. If it shows an ash color indication whenever it touches this white color line, then you should not enter into buying. So that was the case. So what you can do is that here is the entry point. So here you can very well go and enter in the market. So what I am going to do is that just I am going to mark the entry point here, probably few points above or below this blue color line. You can enter into the market. You know very well where you should place your stop loss. Your stop loss should be few points, 2 or 3 points below this white color, the second band. Now you can see, you should wait and see that whether the price is moving up. Yes, you can see that to certain extent the price moved up and you made some good profit out of this. So if you want to trail the position, so few of the clients and traders, they have asked us this doubt. So if I want to run this profit, what I should do? There are two answers for this. Booking a profit depends upon the available fund you have in your trading account, and it is based upon the trading plan you have. In particular, that if you say that per day I want 1000 or 2000 rupees profit, it depends upon your trading plan. And we had provided various options for that. You can run the profit by using this lower band as your stop loss. Always we say that whenever the price moves, you modify the stop loss so that you are minimizing your risk. So that is the case. So I am going to delete this in order to avoid confusion. Now let us see that for the next entry. So here in this particular red color indication, as we had told that we may not consider this. Why? Because we got a sell indication above the green line, so we may neglect that. So here we are not going to do any trading for selling. So now we know that whenever the price approaches the green line, you should follow the 5-point rule, which means that if the price is coming below 5 point from this particular area, so I am going to increase the scale so that you can get some clarity. Here what you do is that just 5 points below that you will be entering into this trade, and just 5 points above that you will be placing your stop. Here you would have been into the trade, and this should be your stop loss. But slowly we are much focused on reducing the risk, so we seriously advise the clients. You can see the upper band should be your stop loss. So whenever the price moves, you should come down and reduce your stop loss so that you are reducing all your risk. But here you see that to up at a particular point, both your entry points and stop loss are equal. So you know that even if you are stopped out, you will come out with no loss. So in this particular case, it has provided you sufficient profit. But if you think that you can run your profit based upon the second band, you would have your stop loss would have been triggered in this area. But even then, your entry and exit points remains the same, which means at least at cost, with zero loss, zero profit, you can come out of the market. Now let us see that after triggering the stop loss for the clients who try to run their profit. In both the cases, the market, in the buy case also and also now in the sell case, the signals had provided a sufficient profit. But if you feel that you should run your profit, then you can see the way we had provided all the solutions for minimizing your risk. Now we can see that this after triggering the stop loss, the market provided a blue color signal, which means that the price is staying above the green line. Here you should follow the 5-point rule. So above 5 points and just below 5 points should be your stop. Approximately I am placing it, I am not doing mathematics here. So here we entered into the trade. As I told you that always you should come and increase this stop loss. In this particular case, after providing full profit, we can consider this we are stopped out for this particular entry without providing sufficient profit. So in the next case, you can see the price consolidated here for a long time. Here it had provided a valuable entry point, so you would have entered into the market in this particular case, and your stop loss always depends upon the upper band. If you are entering having this lower band as your entry point, your reference point, then by default the upper band should be your stop loss. But in this particular case, let us see that you would have entered in this particular area. This will be your entry point and your stop loss will be somewhere here. But let us see that just few points above that. In this particular case, you are stopped out. So continuously in two cases we are stopped out in this particular area. Hopefully yesterday the market, we know that we have crude oil inventory report in this particular zone. We will be waiting for crude oil inventory report, so if the price consolidates, it's quite normal for all the clients to look into the consideration whenever there is a major news. So everybody knows that around 8 o'clock we have crude oil inventory report. That is the particular reason the price is providing a long consolidation before the report. So we take that into consideration. Now you can see the time. That is the reason I told you whenever I place the cursor, you can see the time. After the report got published, you can see that the price showed some volatility, but our charting platform shows everything in ash color, so it indicates that the market is not moving anywhere after the report. So it had provided as an indication in this particular point. So what we'll be doing is that you can right away enter if it provides a signal, that is blue or red color signal, which is placed above this based on the green line. So if you got a signal, particular signal like this, you can right away jump into the market or wait for the price to come near this white band. You can take the entry point. So here we got a valuable buy entry. We consider this as a valuable entry because it had provided a signal above the upper band and the price is staying above this green color line. Now we know that after a consolidation, so you can see the time from 5 o'clock, not even from 5 o'clock, you can see this particular time right from 4 o'clock the price was moving sideways. After a very long time the market had provided as a signal after the inventory report. So now you can see the case. So here you may be the point, this may be the particular area where you would have entered into the trade. We know that the stop loss will be based upon the lower band. So whenever you take any entry signal based on upper band, you should go and take your signal stop loss, place your signal stop loss based on the lower band. And we seriously suggest all the traders and clients to increase your stop loss based upon the lower band. So here you saw that after the entry point it had provided a sufficient profit. So we are now, after a few hits, we are now into a very good entry position. You can see that we are moving the stop loss slowly and steadily. Now the stop loss is placed above your entry point, which means that your stop loss itself is running in profit. I am going to delete this. So you can see slowly and steadily you should always increase have the habit of increasing the stop loss, which means that you are going to decrease the risk. So this entry, particularly this entry, had provided us a very good profit for the clients who had tried to trail their profit targets. You can know that so it's a very good entry point, and you know that the price closed without even triggering the hitting the lower band. So this is the way you will trade in any market. So you may face few losses initially, that you should also look at the major newses which can possibly come out during the trading session. We are not in particular, we are not going to analyze what is the impact of the news. See what is the whether the inventories are up or down. We are not going to do that, because our charting platform is designed in such a way that it takes care of everything. If the news is positive, it provides you a blue signal. If the news is negative, it provides you a red signal. So that itself is sufficient, because as a technician, we had designed this platform to provide signals in a very accurate way. So this is how we should have applied our simple day trading positional strategy in crude oil in yesterday's market. The major advantage of following this strategy is that you would have seen that whenever you make loss, your loss is small, and whenever you make profit, you are making a very big profit. That is the greatest advantage of this strategy. So let us see how you are going to trade in today's market. So we have one-to-one training session. If you are not our client, please open a trading account with us. So thanks a lot for watching our videos. Happy trading. Take care. Bye.